Hey, welcome back to the channel. Appraisals on pre-sale purchases. In this week's video, we're going to talk about probably the most hot button topic that's causing serious issues for buyers in today's market, and how lower than purchase price appraisals are starting to become the norm in specific areas around the Lower Mainland. Real quick, if this is your first time to the channel, my name is Hasan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. When I'm not making videos like this, I'm helping people just like you buy and sell real estate across the Lower Mainland. So if that sounds interesting to you and you want to chat with me one-on-one, you can book me for a free call at the Calendly link below or on screen, and subscribe to this channel so you don't miss a future video. All right, I hope you had a very wonderful week. We're gonna hop right into it. Appraisals for pre-sale purchases or even resale purchases. I'm gonna talk about specifically what they are and why they're causing a lot of pain in this market. Basically, when you go for a mortgage on a new property, and let's talk about pre-sale specifically. You purchased that pre-sale property, say several years ago, whether that's a year and a half, maybe it's 2.5, maybe it's 4 years ago if you purchased into a condo tower. So you purchased a property, you have a contract that's purchased at the market value at a price 4 years ago. And so what ends up happening as you get closer to completion, you go to your lender, you go to the bank to get the mortgage, and now what they need to do in order to give you that mortgage is they need to basically assess the market value of that property in today's market. Now, what some people will do is they'll get a pre-approval on a property, and sometimes even get pre-approved before purchasing a pre-sale property that again completes way down the road, but they don't quite realize that that's not necessarily a firm approval, and it would be subject to an appraisal closer to that completion time. So ultimately, what's happening in the market now is we're having a record level of condo completions last year and this year. And as we all know, or most of us know if you've been following the channel for a bit, is that prices are down from pre-sale prices of 3-4 years ago, especially in the condo market. Prices are significantly down in specific areas and with certain types of product. And so what's happening is the appraisers are coming out closer to completion. They're getting ready to basically get a full approval on that mortgage, and the market values are coming in short. And I'll give a specific example. So, suppose you bought a condo for, in pre-sale for $1 million. Let's say, you have a contract price of $1 million. You're putting 20% down. So the lender will basically say, they use what's called a loan to value ratio, and they'll say, we'll give you 80% of the value of the property. And it's a very key distinction between, the value of the property and what you paid for it. So they'll give you 80% loan to value. And so ultimately on that $1 million property, you're going to come with $200,000 plus your closing costs, etc. And the lender is going to give you $800,000. Well, as you get closer to completion now and you have to go for that the appraisal will come out and he'll say, well, based on what's happened with the market, this property is not actually worth $1 million. In our eyes, it's worth $850,000. And so we'll still give you 80% loan to value. But that 80% now, it's not $800,000 we're going to give you, it's $680,000. And so now you as the purchaser, outside of the $200,000, you thought you were going to have to bring to the table, there's now a $120,000 gap that falls on you to be able to complete on this sale. And this has been, it's been an issue for some time over the last 6 months, 8 months or so. Hasn't really made a lot of noise. It's kind of been under the radar a little bit. One of the largest appraising companies just actually came out and said that they're seeing about 50% of their completions that are coming up, these condo completions, having low appraisals, having the appraisal come in low, and that buyer now has to top up with funds they likely don't have. And so if one of the largest appraisal companies out there is seeing 50%, up to 50%, this is obviously going to be a significant problem moving forward. Now, a couple of key things that are very important to think about. in many areas, there is a lot of condo supply and not a lot of sales. And let's say specifically with these new construction products. So, for example, Brentwood, and maybe you'll have a lot downtown that, has recently completed. There's not a lot of buyers for it. Now, ultimately what happens is a lot of this active inventory that's on the market right now, let's take Brentwood, for example, these are in buildings that completed last year. And generally speaking, if we're looking at the same area and the same type of product, people whose pre-sale purchases are completing this year will have very likely paid a higher price than the properties that completed last year. The peaks of the market ran right through 2021 into early parts of 2022. And, a condo tower, it can take 3, sometimes 4 years to complete. And so whoever's completing this year very likely paid more in that same area for similar type of product than someone who completed last year. And I'll get to why this is important. I've mentioned on my channel that sellers have been very resilient with their home prices. If they're not getting the prices they want, even with these vacant condos, they're just holding on. But there's always people that just need to get out from the property. They're willing to sell at losses. And we're starting to see that again in certain areas out in the Fraser Valley for sure. Surrey Central, it's happening a lot. Brentwood, like I mentioned, we're starting to see it a little bit more. And so the appraiser that comes out today to assess something that's going to complete, they only have a select amount of data to actually look at because they're looking at sold prices. When they're trying to value what today's condo is worth, they have to look at what is being sold. They don't look at active units. And that's kind of a lesson for everyone. If you're trying to figure out the value of properties, you really just want to pay zero attention to active listings and you only want to focus on the sold price. So now the appraisers are looking at sold prices of people that generally, very likely again paid less than today's purchaser. So they have more margin and they're selling at a loss. So when they're comparing it to that, it's bringing in a lot of these markets very low. I can speak from experience where I've had conversations with people, they purchased into luxury buildings. They're seeing their appraisals come in $200,000, $300,000, even more than that below their contracted price. So they're having to bridge that gap. It's a widespread issue. It's only going to grow. Now, one of the things that we're also seeing in the market now is some lenders on certain projects are doing what are called blanket appraisals. And so basically what they're saying is they're going to the purchaser and they're saying, look, we will give you the mortgage based on your contract price, not based on today's market value. So based on what we've been talking about today, you can see how big of a lifeline that is for people, because if you don't have that extra 100,000 to bridge the gap, or even 50,000 or 150, whatever it is, you're stuck. And you can walk away from your deposit, sure, but that's not the end of the damages that a developer could come to you for. Because you may be thinking, okay, well, look, you win some, you lose some. You just walk away, you try and forget about this, you shake it off, you try and regroup, you lose your deposit, sure. But, that developer can come at you for more losses and damages if they have to sell that unit at a lower price. Right? Because they had a contract price with you that you had agreed to. Now, with these blanket appraisals, again, specific projects, huge lifeline for some buyers. And, a lot of times the lenders that are doing these sort of blanket appraisals, they are funding construction on these projects too. So you can kind of see it's a little bit of a house of cards, because when a buyer doesn't complete on the property, it hurts everyone. Especially in a slower market like today. It hurts obviously that buyer. It hurts the developer that has to, try and resell that product. Obviously the lender, whoever's financing the project, doesn't want to see sales not close. And so it's like this house of cards where everyone essentially is trying to, support each other. And we're in this market, in this condo market, where still a dearth of sales and still a lot of completions coming up. So, the message in this video, if you have a pre-sale property coming up that you're going to be closing on, even if it's not in the short term, talk to a lender today. There are some lenders out there that do offer what are called firm approval, so full mortgage approvals on pre-sale purchases even while it's in the pre-sale stage, even if it's a year or two away. And when I got my pre-sale, my first one back in the day, I went for the firm approval process because I actually knew that I was going to be going into real estate full time at that time. And I knew that I was not going to be able to get approved for a mortgage after I quit my cushy full-time job to jump in with 2 feet in real estate. And so I got the firm approval and I pushed forward. Now, that's not to say, this is a caveat with that firm approval, that they have to lend you the money. The bank can always decide at the last minute they don't want to. But start your due diligence process early, way early. Don't save it for the last minute. You want to go into this situation of closing on your condo or whatever type of property it is. You want to go in well in advance, well prepared. That way, if you do need to look at alternate lending scenarios, whatever it might be, you're ready to do that and you have the time to do that. But we're going to start catching, there's going to be a lot more coming out about these appraisals and the actual effects of them. I'm having conversations with people, say bi-weekly, that are saying, look, I'm going to walk away from my deposit. I have to. And so this is just starting to kind of amp up and catch some steam. The state of the condo market in general, because it's been where it's at with all of this unsold inventory, we're now seeing on the pre-sale side, and we have been for the past year, pre-sales are not selling. They're basically not selling. I just caught wind of a pre-sale in Brentwood. It was going to be a master plan community, 4 towers, 1,200 units total. Phase 1 launches and they don't hit their pre-sale minimum. Phase 1 is off the books. And the purchasers that did purchase, they get their deposits back. But that's not moving ahead, and that's 1,200 units. You might listen to that and say, well, who cares? You're talking about how we have all of this condo inventory anyways, and it's not selling, and that is the case. However, the pre-sale projects that we talk about today that have not broken ground, that is our inventory and our supply 4 to 5 years from now. So the condo inventory that's in the market right now that's ready to go, it's not going to last forever. And so, it is important that we still have shovels in the ground today so that we have supply, again, 4 or 5 years from now. Virtually everything that's being built right now is purpose-built rental, because there are incentives for doing so. You can get greater density, the financing's a little bit easier as well. So lots happening in the condo space, and it's kind of it's a unique market in that you have nothing, being built, and developers saying, why would I spend money marketing, launching a marketing program into this type of environment? So you have that on one side. But then you have all of this condo inventory, and if you've watched my channel for a bit, that developers are holding a lot of this condo inventory that they're looking to move as well. So there you have it, guys. I hope you learned something about appraisals and the appraisal process and how it's affecting the real estate market here in Vancouver. If you did, hit the like button, because what that does is it takes the video and it sends it out to more people so they can also learn from it. And if you enjoy weekly real estate content, subscribe to this channel so you don't miss next week's video. And lastly, again, if you're in Metro Vancouver or the Fraser Valley, you want to talk about real estate with me, you can book me for a free call, or you can just give me a call, send me a text, shoot me an email, whatever's easiest for you. I'd love to chat with you, but I want to thank you so much for watching this week's video, and I look forward to seeing you next week.